We are staring down the barrel of the biggest economic event of not just this year, but potentially the decade. This is like the Super Bowl meets the World Cup, meets the Olympics, meets a Psy concert in South Korea. That's right, we are looking at the big one. And with big expectations comes massive market volatility. We could see the beginning of an even further collapse in stocks and crypto, or we could see an effective bottoming of the sentiment, max fear, and a potential reversal in markets. This is one of the biggest macro crypto trading events that I've ever seen in all my days. And today I'm going to be giving you an absolute cheat sheet on how you can navigate and understand exactly what's happening. Because by understanding what's going on here, you pretty much unlock the skeleton key as to what's going to happen over the next several months in the macro global economy. And yes, that does affect our beloved crypto bags more than we could ever imagine. So let's dive in because there is so much to cover. So first off, what is April 2nd? Well, April 2nd is Trump's so-called Liberation Day, where he's going to be announcing a slew of tariffs. The only thing about this is we don't really know what's going to be announced. It's kind of like the series finale of a really hyped TV show. We're talking Game of Thrones season 8 finale. You don't know what's going to happen, but you're pretty sure it's going to suck. We're talking about tariffs on everything from Chinese imported tech gadgets. Prepare to see the first $5,000 iPhones, and you need to open your fridge right now and say goodbye forever to that Parmesan cheese. You ain't no more Parmesan. You better get used to American cheese on that linguine. That's right. It's going to be Kraft singles or nothing. Billions and billions hang in the balance. So strap in, everybody, because things are about to get wild. So first and foremost, this week isn't just about tariffs. It's important to know that there is manufacturing PMI data, JOLTS data on Tuesday. This is about job openings. Wednesday is the Liberation Day, hump day, not the good humping and not the good hump. ADP non-farm employment data Thursday, March job reports Friday, and Fed Chair Powell speaks on Friday as well. So pretty much a nonstop, action-packed, back-to-back, absolute blockbuster week we have going on here. But before we go into the specifics of tariffs, and I'll go through absolutely everything that we know, everything that's been confirmed, it's important to realize this. Well, Nikki T, the Fed whisperer here, has come out here yesterday and said Trump officials still aren't sure what they're going to do with tariffs this week. In recent days, advisors have considered imposing global tariffs of up to 20% that would hit virtually all U.S. trading partners using IEEPA. I don't even know what that means. Whatever the final plan, the president wants the policy to be big and simple. This likely means final action will be broader than earlier plans to prioritize levying tariffs on the U.S. biggest trading partners, about 15% of the world's nations. So let's talk about exactly which tariffs are going to come into effect or which ones we expect. And we'll go through this pretty quickly, but it's important that you understand the wide array of tariffs happening. And most importantly, in this preliminary analysis, as well as the post-game analysis that we'll do throughout this week, our goal is to get to a few universal truths, which we'll talk about at the end of the episode in specific, which is what is the ultimate goal? What is Trump's plan? And what are the things he's really looking for to have happen here? In order to understand what's happening, you need to, as best as we can, understand the motivations and the outcomes that the administration is looking for. Two, what we want to understand is there a trade to be made here? Because there's always a trade to be made, and understanding that trade is absolutely critical, because I believe there are a few trades coming up that I'll be looking to take on some serious risk here. As with great tariffs and great volatility come, obviously, great opportunities if you can pick them. So first and foremost, let's talk about Liberation Day. What is Liberation Day? Well, effectively, this is designed to be a broad, reciprocal tariff day. The thing is, we don't know exactly what to expect here because Trump has come out and said a variety of things. And in fact, as we've just read, Nikki T over at the Fed, one of the most important whisperers that we've had about global economic moves, actually seems to indicate here that the administration itself hasn't landed on a final outcome. This, again, is very typical of the Trump admin, and partly why Trump is so good at getting these markets to freak out is that the markets simply do not know what to expect. And when markets don't know what to expect, they expect the worst. Now, effectively, any country that has a tariff on the United States, Trump makes it seem like there will be a reciprocal tariff. We don't know exactly what's going to happen, though, so we'll have to wait and see with bated breath. But what we know for sure is that this April 2nd day must be a put up or shut up type moment for Trump. He absolutely must do something big and decisive, or else the markets will probably see him as the boy who cried wolf. He really has three paths, the way I see it, with April 2nd. He could go extremely hard and show that he's not messing around and tariffs are a significant policy for him. He could go middle of the road, keep the market kind of guessing, but open the door to the possibility that he's more reasonable on tariffs and that he's using them more as a bargaining tool. And then the third is he could go soft, which seems unlikely, but in that event, he'd probably be the boy who cried wolf. The market would probably just start calling his bluff, and maybe we just see a massive rally out of that. Maybe we remember this as the tariff FUD collapse that never was. We will find out very, very soon. The second thing that's happening is Canada and Mexico tariffs. Now, we heard a lot about this right at the beginning of the administration. Those were put into effect nearly a month ago, but then paused. And now we're going to see exactly what comes back into effect. These tariffs cover things like agriculture, clothing, and dairy. Now, quite critically, there is a 20% tariff on Chinese goods that could affect up to $800 billion in goods. And what we know is that China is not sleeping around on this. Just today, we've seen that China has blocked the sale of the Panama Canal port to BlackRock, which was a $23 billion deal. Again, the trade war is heating up and moves are being made globally. We've also seen tariffs announced on automakers that are not from the US, and it's actually being broken down as to what percent of the car is manufactured outside of the US. So even a car like Tesla, obviously, which has touted that it's the most American automaker and manufactures the most in the United States, is still not 100% manufactured in the United States. So pretty much all cars across the spectrum will probably see price raises because even American automobile makers manufacture parts in Mexico and elsewhere. There's also been talk of blanket tariffs of anyone who buys oil and gas from Venezuela. We've not yet seen what's actually going to happen there or if that's just talk. And there have been sector-specific threats on precious metals like copper, pharmaceuticals, and even lumber. Not to mention European designer goods, and of course, European alcohol like champagne, which, by the way, if it's called champagne, can only be made in France. So there's no American champagne industry to protect here. So now that we've gotten through all the boring stuff, let's talk about the actual impacts on what's happening in the economy, the uncertainty that's bubbled up, and effectively what's going on with the markets. So first and foremost, we're going to have a big, beautiful event on April 2nd in the Rose Garden. You'll have some beautiful roses behind this economic announcement, which could spell devastation or it could spell something else, which again, we'll talk about very shortly here when we get to how we're going to trade this market, because that is, of course, the ultimate question. In light of all this, we have seen that the economic policy uncertainty reaches the highest since 2020. This is, as you can see, almost as high as the COVID spike here in 2020. To put this in perspective, we're actually seeing 80% higher uncertainty than we did in 2008 during the great financial crisis. I think what people are trying to figure out here is if Trump is serious. Is he for real? And does he believe in tariffs, or is he doing this just to freak the market out so he can get his lower interest rates, something we'll talk about here in a second. But it's starting to really feel like Trump believes in tariffs, and at least that's what he wants the market to think. It may be the only thing he truly, deeply believes in. As Buco Capital bloke says, it's not a tool, he's all in. Of course, Trump has been saying that tariffs are going to lower prices and that is going to be great for Americans, but people aren't buying it. Most people think that tariffs will make things more expensive, leading to inflation. 40% of Canadians are fearing losing their jobs right now because of the trade war. We now are seeing that the tariffs and all of this crazy talk out of Trump is pushing Japan and South Korea closer to China. That's what we're hearing, is that they're now entering into trade talks for the first time in, I don't know, maybe forever. And we are seeing right now a huge drawdown in the 10-year yield, which, of course, if you remember, was the ultimate goal of Scott Bessent and Trump's policy when they first got into office, is how do we get the 10-year down? That was exactly their main target. Well, it's coming down. Is this part of a plan to crack the housing market, which has, of course, become wildly unaffordable, and then bring yields down, crush inflation, all with tariffs and tariff talk? Is this part of a master plan, or does Trump truly believe that tariffs are the answer to all of America's woes? Because this is a tightrope that Trump is walking right now, and we need to find out, is he walking towards doom or salvation here? We will all be finding out together, but if you ask me, this is all an elaborate attempt to crash the economy so that we get affordable housing, we get inflation gone, and we can now bring rates lower so that we have a new period of growth and expansion. If I were to guess, that would seem like the only logical approach here, but it's certainly a dangerous road to be walking down. It's not an easy path. There's certainly a lot of ways that this could go horribly, horribly wrong. And of course, Goldman Sachs now raising its recession odds. And if you're looking for a little bit of solace, I think this is actually pretty good. You can see Ethereum and Tesla have traded in lockstep over the last few months. That's a good indication that what's happening in crypto is highly, highly correlated to what's happening in the global macro economy. Remember when we said on our last video that that moment in 2024, right after the Trump election, when things were expanding with global liquidity and the market exploded, the gains that we saw there, I think, were directionally correct. However, after Trump got into office, he initiated a global liquidity crunch. So I don't think what's happening right now in crypto is a sign that crypto is bad or even ETH is bad. I think that we should really be patient in understanding that this is a global liquidity crunch and that crypto is suffering as an extreme example of what's going on across the economy. But once that global liquidity crunch changes into a liquidity expansion, I believe that a lot of what we saw in that last chapter of 2024, in that November to December moment, that is pretty much the thesis on what I think happens next. But more on that at the end of the episode. What's interesting is that, housing has become quite unaffordable, and we apparently have 6.1 million Americans behind on their mortgage. As you can see, this is the highest this chart has been since pretty much the housing collapse back in 2010, 2011. We see that the policy index now is 25% above the Trump trade war 1.0 in 2018. And people are worried that there might be a credit event on the way, along with my buddy Eric Crown showing that there are 3 drives of bearish divergence on the quarterly SPX chart, right? So that's not good. That would mean that we might be at the beginning of a very, very long downtrend. This is the quarterly chart, right? And the first drive of bearish divergence here was in 2018, right? So if this plays out, this could not only be a multi-year process, right? We're talking about bearish divs across 7 years. That is not a short-term trend change if this is what indeed is happening. We have a 43% odds of recession on Kalshi, and I think you get it at this point. The markets are extremely, extremely scared right now. Not just crypto. Every single market on earth is freaking out and just doesn't know what to expect. And part of that might be the strategy. As we've discussed, Trump and Bessent want to get yields down. The Federal Reserve is worried about inflation still. So the only way to really kill inflation and bring down yields and bring down the cost of everyday goods is with a significant recession. That is simply the only easy way to do this. There is not usually a way out without a major recession. So if you ask me, they're trying to cause that. And it seems like they're doing a very good job of getting it to happen quickly, because the market has been very stubborn. You can't just snap your fingers and call for a recession. You have to make the market really, really scared. And this, if that is the plan, is very much so being effective. Here's the thing though, I genuinely think that Trump sees tariffs not only as a way to effectively freak out markets short term, but I think he genuinely believes that he can onshore a bunch of manufacturing, bring back jobs to the American manufacturing sector by effectively making it too expensive to buy from other countries with tariffs, and get rid of income tax or significantly reduce income taxes by shifting that revenue to tariff revenue, effectively creating what he is calling the external revenue service. If you ask me one goal, which would be to crash the markets and kill inflation and bring down rates, that I could see as being achievable. But to do all of these things, to effectively onshore manufacturing, to completely eliminate income taxes, which is of course not going to help them balance the budget, not going to help them reduce the deficit, to do that and to walk this tightrope of causing a quick recession and then to somehow bring everything back to life in time for it not to be political suicide, this is a very, very difficult road that Trump is walking. And I have no idea if he's going to be successful. But since it became clear that he wanted to crash the markets, my one and only mantra has been, I don't want to get in the way of this. I think you can argue many things about Trump, but one thing is very clear. He has more political momentum than almost any candidate that we've seen, at least in my lifetime. And with both the House and the Senate, I'm certainly just not trying to get in the way of what seems to be his goal, which is to bring markets lower. But the reality is that this bear case is starting to get baked in, meaning that everybody is starting to understand, starting to agree, starting to see that Trump is trying to crash the markets. And the question is this the beginning of the next segment of the crash? Or have the markets started to really factor in all of this negative potential impact? And are the markets already pricing this stuff in? For example, Bitcoin has a death cross coming. Benjamin Cowan showed that these death crosses pretty much usually mark local bottoms. You can see all these yellow arrows here are when the death crosses occurred. You can see these are pretty much the pico schmico bottoms of whatever bearish trends are happening. This is not the time. Obviously, you have this one in 2022 where it rallied significantly, but eventually came way lower. So again, will there be a counter trend rally and then another major move lower? These are questions I can't answer for you in specific, but we also have things like FTX starting to repay today. I thought this was pretty funny because if you have one BTC, you'll get 18,000. Disgusting. If you have, because this was the price in 2022, if you have one Sol, you get $15. Grotesque. But if you have Ethereum, you're pretty much getting back your full value, as Ethereum is trading at the same price it was in 2022. That is disgusting, but in a different way. Sentiment check. Effectively, this post goes through that, despite all of this, we could be seeing the bottom. Effectively, this post is trying to say that we could be seeing a sentiment bottom. Agreed. Sentiment couldn't be worse. But if sentiment being bad was a reason for a bottom, we would have started reversing a while ago, because sentiment has been horrific. As Good Alexander says, the market is max bidding German tank stocks, gold, fading the actual future of warfare, AI-powered drones, and the future of money, crypto. As soon as there's a deal in Ukraine, this entire market meta unravels and we go back to 1999. He's referring to the dot-com bubble, saying that we're going to get a massive tech bubble, a massive crypto bubble as soon as this changes. Now, I think this is a decent take. We'd also see instability, global instability here, but I don't think this really hits the nail on the head. I'll give you my full analysis here in a second, but I don't think we're actually in a Ukraine war-based economy. I think we're in Trump's market now, and people are just trying to figure out which way Orange Man is going to go and what it really means for the markets. And just to drive this point home even further, we see apparently a source saying that Trump has just said he will be relatively lenient on tariffs. We'll be very kind. We will be very kind. You can even just hear him saying it. Again, the sad reality is that we have no idea what these tariffs are going to be, what they're not going to be, and this has kept the market in limbo. But what I did say here is if Trump goes soft, he will lose control over the narrative. This narrative has been a Trump-driven narrative where he has decided to move and walk the markets lower on effective, complete chaos and complete lack of clarity. So in conclusion, Liberation Day, April 2nd, is going to be wild. We don't know what's going to happen. But in the meantime, the Fed is busy in the background smoothing things over. And apparently the Fed urged to mull a hedge fund bailout for basis trades. Okay? This is QE. If this happens, this is quantitative easing. This to me has echoes of the bank term funding program that we saw in 2023. Again, this is just a way to bail out banks, a way to remove risk from the balance sheet by buying toxic assets. This to me is a form of QE if it happens, but it's just important that we realize in the background, the Fed is preparing to act and figure out what they need to do to act. They just want to avoid causing hyperinflation. So this is what's going on in the background. We have the Fed put that's getting ready. It's just not ready yet. And we've also finally seen a buy signal fire. I want to shout out Eric Crown for doing the coverage here. And we saw it fire on the 1-day and the 5-day. And this has fired only 18 times in Bitcoin's history. And 15 of those 18 times, it has been mega bullish. We also have Folis here saying, imagine the smell if this was just a May 2021 dip and we get this same May 2021 boom up to, I don't know, what would this be? 120 something thousand. This would catch everyone off guard if that was the case. So what is going on here and how should we be trading this market? Well, in my opinion, if Trump goes super hard on tariffs, we will see the market react potentially in a real way to these tariffs. Looking at the S&P, I mean, this is disgusting. This rejection off of the prior weekly low support, this is really, really, really gross. This is probably the worst I've seen mainstream markets look in quite a while. Of course, the worse things get, the worse things look, the more people bearish, the more you have a setup for a bottom. So the question here is, if Trump goes hard, imposes crazy tariffs, will the market freak out, puke, and then start a real recovery? Will that be that moment where all of a sudden people realize we've been pricing in all of this all along? Or is this the beginning of a mega downtrend? Remember, the most money is made in crypto by identifying the overall macro direction of the markets and generally being aligned with that. So you want to understand which way is the wind blowing. Is it overall bullish or is it overall bearish? Because if you identify that, then you just want to stay away from getting too chopped up with the little micro moves. But the question is right now, is this the beginning of what could be a multi-month or even a year-plus long downtrend that Trump has initiated with his policies, with the goal of resetting the debt clock, with resetting the interest rates, resetting housing markets, and effectively changing the way that manufacturing and global trade happens, at least in the United States, or the way that we interact with every other country? Is that what Trump's goal is? Because if so, and if he's successful, this is not the time to be getting bullish. In fact, it's the time to be figuring out and learning how to short the markets. I'm not saying you should start shorting right now. Again, we're at a very low point. The chance of this springing up and at least having a counter trend rally is very much so in the cards. But in the end, our goal this week is to identify the overall macro direction of the markets. And once we identify that, you can mostly trend in that direction until that has been invalidated. This is why I flipped short several weeks ago, was because I started to feel like the overall trend of the market was down. And the goal when that happens is to step aside and not get hit by the train. Regardless of when you wanted to sell, how much you had at all-time highs, that doesn't matter. The goal is identify the direction. And I see a few outcomes here. First, I'm going to go ahead and assume Trump is going to impose all these tariffs, or else he will lose his credibility with the markets and markets will probably rip upwards and stop listening to him. The second is that if he does impose tariffs, there will probably be an initial puke, but then we may see the real price action over the following days and weeks, which is we will want to see, is there real weakness, or is that just effectively the ultimate panic bottom where people see the tariffs, everyone sells, and then the real smart money comes in here and starts buying stuff up. Now, how does this relate to our beloved Bitcoin? Well, check it out. We have a really simple range here set up. We have the prior high of 92.7, and we have the prior low of 76 and change, call it 77. And we are below the sort of midway point here of 85. Again, this is sort of where I had our new buy zones. The thing is, I'm just waiting to understand what Trump is doing on tariffs. Now, if Trump announces tariffs and we get some, price action that kind of wicks like this, but kind of recovers and reclaims this range, this might actually be a good point to flip long and say, okay, this was your ultimate puke. This was the ultimate peak fear, and the market's now priced in the worst. And remember, we've now seen Bitcoin reprice all the way down from 110K, and this would be, a 36% move. If we get down a little wick below there, 30-something% move. That is a significant pullback, but not uncommon for Bitcoin. Maybe that is enough pain and enough people would be off sides to the point where the market can rally. Maybe that's what we need. But really, here's what I think might happen. And this is the scenario that makes me very cautious as to pulling out any big risk or putting on any big risk in the market right now. I believe that there's potential for Trump to go super hard on tariffs, markets to start taking him fully seriously, and seeing another major leg down in all markets, which will trigger potentially some things to start breaking in the macro economy. Some things that will force the Federal Reserve to step in and start initiating not just the end of quantitative tightening, but the beginning of quantitative easing. That process might not be immediate either. It could take several months for these particular policies to actually have that effect. So it's important to remain a little bit patient here. But the biggest thing is, if there's any announcement of quantitative easing, if Trump shifts his rhetoric at any point to being much softer, much more dovish, or if we see the 10-year yield have a massive collapse, it would be an interesting time to start looking to see a pivot in this policy. So if Trump goes soft here and he doesn't impose a lot of tariffs, I would be looking at this purple box that we're in right now to start really loading up, and anything down here towards the lows would be phenomenal buys. If he does go hard and he does start to try to initiate crazy tariffs and the market does give up this prior support here of 77K, then I'm going to be looking to be buying in the original heavy buy zones that we've had for the last few weeks, right down here in the low 70s. I think that would be a phenomenal place to get some long-term buys in, regardless of whether the market pumps immediately or not. Again, only if recession. I have this box down here, only if recession, and I'll move my face. That is in the 50K range here, the sort of low 50s. I don't see us getting down there unless things really start cracking. There would be probably a lot of signs that that's happening early. But again, only if recession, and I would have some powder for that. And if we do get down to those 50K ranges, I'm just all in. I'm all in, and I'm just waiting. I'm waiting because at some point the markets will flip and those 50K buys will be absolutely incredible. Now, I will say that in these times, you want to be assessing pretty much all markets and assessing everything. Use your logical brain. These cool downs in markets, let all the hype go away. And what you want to do is start assessing where real value is. Now, this tweet has struck me incredibly hard. This is from today. Now, if you guys have seen, obviously, everywhere on Twitter, everywhere across the internet, everyone's turning themselves into Studio Ghibli art form, and they're using ChatGPT. And that's because the new ChatGPT image generator is incredible. It's actually the best in class. It's even shocked me, and I've been playing with AI almost daily for the last several years. But this was a huge update, and it even made me way more reinvigorated to be playing with AI and using it for absolutely everything I can. I suggest you do the same. But check this out. When they launched ChatGPT 26 months ago, it was one of the craziest viral moments that Sam Altman, the creator, has ever seen, and they added 1 million users in 5 days. They've added 1 million users in the last hour. So all of the processing, which they said they were frying their NVIDIA chips, even with the giblification that was happening a few weeks ago. Now they're adding 1 million users per hour. In my opinion, the need for compute, the need for NVIDIA chips is dramatically increasing. So don't believe any of the FUD. Don't believe any of the scare tactics. At some point in all of this madness, something like NVIDIA is going to get undervalued. And these are the moments that opportunities arise that can be life-changing. So regardless of what you feel about this moment, know that your emotions are probably going to lead you down the wrong road. The question is, when has the market priced in the damage from tariffs? And if tariffs are going to bring the market lower, how long is it going to take for Trump and the Fed to see what they need to see to then reverse course and start stimulating markets? Because it won't be forever. Certainly, it won't be forever. Everything Trump wants to accomplish by onshoring manufacturing is inherently going to cost a lot of money. It's going to need financing. They're going to need to borrow. And that's why they want to drive rates so low, so they can borrow money for their big plans. The goal is not austerity. Austerity, meaning slashing the budget to the point where, the government never outspends its budget. That's to me not reasonable. It's unlikely that the government's going to achieve that. What's much more likely is that Trump is trying to cause a short and deep recession to reset the clock and then start stimulating again with low rates and effectively a new period of expansion where inflation will effectively be killed off. The question is what lies between now and then. And I think things get much simpler on the other side once we have Fed lowering rates and you have Trump effectively stopping trying to crash the markets. The question is what is priced in and what isn't. And in my opinion, there's a chance, not an overwhelming chance, but a chance that we could be looking at a moment of max fear. And so as much as there is this bear case building up, there is also a moment probably coming, if we're not already at it, that we will see max fear taking place and we will see capitulation that will open up for massive buys. Anyone who can tell you they know what happens next is lying because we don't even know what Trump's going to do. But once we see April 2nd happen, we're going to be rapidly analyzing the markets to understand, is this the beginning or the end of the bearish trend? And you need to have your mind open to both possibilities. Because once this market rallies, with banks able to custody crypto, with Fidelity launching its own stablecoin, with regulatory clarity, with all kinds of cookies for builders, we will see a golden age of crypto emerge. And the goal here is to not lose our shirts or our heads before it begins. Anyway, I hope you feel extra liberated. If you enjoyed this video, make sure to click on this one above, smash that like button, and make sure to subscribe as we take you through the journey of figuring out exactly where the bottom is on all this crazy madness. See you on the next one.